This episode of the podcast is brought to you by our friends at Regrow, the premier cloud-based cannabis supply chain management system.
Question for all the cannabis operators out there. Are your SOPs tied directly to your cultivation plans? Can you easily manage your inventory and workforce and vendors from a single system? Can you manage compliance across multiple licenses and states? If you said no to any of these questions, you need to stop what you're doing and talk to the team at Regrow. Compared to other software systems on the market, when you choose Regrow as a strategic business partner, you'll get all aspects of regulatory compliance built in, with the added value of workforce management, inventory, SOP management, and reporting and metrics that allow for companies to scale successfully. Regrow is the single pane of glass view into your entire supply chain, and the software will help you increase your revenue while keeping your entire operation fully compliant. Give them a call or visit their website at regrow.io. That's regrow.io. Regrow, the premier cloud-based cannabis supply chain management system. Hello again, my fellow people of the plant. In this episode of Cannabinoid Connect, I'm talking with Colin Ferrian and Mike Regan. They're the co-founders and investment analysts at MJResearchCo. MJResearchCo provides rigorous investment analysis of the legal cannabis industry to professional allocators of capital, institutional investors, and company executives. During our conversation, we discussed the value talent in cannabis versus other industries. We discussed the most overlooked operational strategies in cannabis. We also talk about the current state of publicly traded cannabis companies, their valuations, volume, catalysts, etc. Last, we talk about Mike and Colin's thoughts on the first draft of the federal cannabis legalization bill. So I hope you enjoy this episode of Cannabinoid Connect as you watch or listen to my conversation with Colin Ferrian and Mike Regan, the co-founders of MJ Research Co. Colin Ferrian, Mike Regan, what's going on, guys?
Hey, how you doing, Kevin?
Kevin, thanks for having us.
Hey, thank you for making time for me in the audience today. Really excited to be talking to you, both of which are the co-founders and investment analysts at MJ Research Co. So before we dive into MJ Research Co. and all the great financial analysis that y'all are producing for the cannabis industry, let's talk a little bit about yourselves so that the audience gets to know about your background. So Mike, let's start with you. What's your background professionally and what led you to cannabis?
So basically, professionally, I'm a pretty much lifelong investor, starting off on the sell side way back when, covering cable and satellite in the internet boom and bust back like 99, 2002. Then jumped to the buy side and basically been on hedge funds, long, short, and equity investing in hedge funds as a generalist. So I basically analyzed all the business models that involve cannabis, but obviously not cannabis until 2019. But, consumer, media, tech, industrials, extraction, agriculture, pretty much all those business models and financials. And then in 2019, I actually had started doing an investment thesis on Scott's Miracle-Gro. That was back in 18. And they had this Hawthorne division that I had to figure out. I was doing something totally unrelated to cannabis. I had to figure out this thing that's supplying tomatoes, quote unquote. And then that's how I discovered Marijuana Business Daily. And I was just looking for, reliable information on the cannabis industry. And so I thought this sounds pretty interesting, actually, as a sort of a macro freight train investment theme. And then they actually had a job posting there for this. They were launching a premium investment service. And it was basically, we can teach you cannabis. We want people who know everything that's not cannabis, now analyzing businesses and business models and ripping apart financial statements, stuff like that. So I joined them and was basically writing for their premium investment service. And then that was great until, COVID hit. And, without a big conference in Vegas, that really hits their business model. So they repositioned the company to survive that. And I still thought the concept of, like real professional grade investment analysis of what I think will be a huge industry in the next, 10, 20 years, just as you basically have a proven product and the legal market gaining share from the listed market. Proven product was basically uninvestable that now is investable, but it's still going to follow similar laws of investing of supply and demand, and what margins are, and how you compete in a given market. So I decided to launch MJResearchCo to basically continue that concept on my own. And then we found Colin. So Colin and I, got together, started trying to produce that kind of research. So
nice, perfect segue. So Colin, tell us about your professional background and when that serendipitous meeting with Mike happened, where you guys formed, MJResearchCo.
That sounds good. I think I'll start with, I'm a pretty avid podcast listener, and I had heard Mike, and I'll come back to my background, but I had heard Mike on Rena Sherbel's podcast, who you have on the show pretty often. But
shout out to Herbal Sherbel.
Absolutely. And I'll say that, like, at the time, I was also starting to listen to yours, and I want to just reference quickly, we didn't mention this before we got started here, but Mike and I had done like a quick dive into your frequency of podcasts. We mentioned the hardest working man in cannabis content, right? But I don't know if anyone else has like gone into this, but you've had, since starting, one podcast per every 2.29 days. That's over a 500-day period, roughly. And in 2021, you've actually accelerated this, and you've had one podcast for every 2.03 days. So it's even more. So, I mean, hats off to you, and thanks for doing what you're doing for the community, because I know it's awesome to be able to have this type of content to be able to listen to. I just got off a 16-hour road trip and ripped through a bunch of the past ones that you had, just catching up. And so
awesome, man.
But
I appreciate that. The analyst is coming out. I can see it. You're crunching numbers for me that are going to help me later on, man. I appreciate this.
Well, yeah, I mean, we're just curious. We're like, he's doing quite a few podcasts and he's talking to a lot of people, but how many is he really doing, right? One for every 2 days over a 500-day period is impressive. And you got a full-time job, and you got a wife, and helping out. I listened to the past episode with Rena, which is awesome too. But yeah, I mean, it's amazing. So
thank you, my man. I appreciate
on behalf
that.
of the industry.
Thank you.
I came from a pretty traditional finance background and was working as an analyst for a long-short hedge fund as a generalist. And in 2015, 2016, I had a request from my boss to go and look at a cannabis opportunity, which is M. Hardin, which most folks don't know. It's almost defunct, but still publicly traded here in Colorado. And so, I mean, at the time, these Colorado opportunities were super exciting. These folks were raising on like a multi-million-dollar valuation, and they had a grow in a storage locker that's like down the street from my house in Boulder, and they're all like otherwise consultants. So that investment opportunity didn't pan out for obvious reasons, but it sparked my interest in the industry just for the logical reasons that anybody else would want to look into it, right? You have this massive illicit market that's going to be transitioning to legal, and it's got established like multi-industry opportunities across the entire supply chain, from cultivation to processing to retail, et cetera. And so I was thinking at the time, I was able to go into the hedge fund early in life and thought, maybe if I can transition into an operational role, I'll have a little bit more acumen for the industry and empathy for everything that you're going to be investing in when you come back to an investment role. And so I was working on a startup for a little while that was doing computer vision over plants, and then moved to Urban Grow, which is like a picks and shovels company in the cannabis industry that supplies benching and cultivation strategy. And I was managing the MSO account. So we're doing everything from how to design new MSO cultivation facilities to how to make sure you can optimize them after they've been built. And I was really enjoying that role, but wanted to get back into finance, and heard Mike on Rena's podcast, and had known Mike from MJ Biz and really enjoyed the stuff that he was writing over there, and thought if he was going to go and start this business that I wanted to join him. I think Mike's words were not to have two Model Ts built, or he said it much more eloquently, but two Model Ts built in the same city. And so that was how I got into the industry, and that's how we started MJ Research.
That's so awesome. And you know what I kind of hear as the overarching theme here, and this is for a few financial analysts who started covering the cannabis industry way early on, is kind of what you guys have said, and Alan Brockstein of New Cannabis Ventures has said it also. You started off in the early 2013s, 14, 15s, kind of evaluating companies to see if they were legit, right? Like, because there was a lot of kind of, I don't know what the right word is, mischief going on in terms of their valuations and, you know, their balance sheet and what they were promising and saying that they were doing in terms of their operations. And now the shift has, like, those kind of companies are weeded out, right? And now it's really the focused on the legitimacy of the industry, and how there are top performing MSOs out there where, you know, we're needing this financial analysis. Is that what you guys, I mean, it sounds like that's what you mentioned, especially Mike, when you first started, right?
Yeah, I came a little later, but backing up, there's a lot of mischief in all companies. And that's, you know, when you're on the buy side, that's what you're trying to weed out, right? You're trying to figure out, how are they going to screw me, basically. That's ultimately what you're trying to figure out, and with any company. But then you come into cannabis, and I think perhaps given the provenance of anyone who's in it is implicitly breaking rules that they don't deem apply to them. I think there was probably a lot more of it. And also, I mean, anytime you see the bright new shiny thing, there's just sort of a group of people in society that sort of just move along. I mean, I saw similar things in the internet boom of, like, you know, similar stupid ideas and stupid companies just trying to sell the new hot shiny thing. And, you know, for the past couple of years, new hot shiny thing's been cannabis, and it's sort of like a group of locusts. They just sort of move on to the next thing, right?
Right.
But within that, there is, you know, it's a proven consumer product that has a lot of demand, that can do a lot of different things, that it can bring a lot of good to a lot of people, and can be a profitable business if run correctly. And I think it's one thing to just always be, I guess the cannabis investing in general, you know, separate the macro theme from then the actual companies that you're investing in, right? Like the macro theme you can be totally right in the macro theme, but if, you know, you pick a bad management team that's lying to you, or even not doing things, you know, actively, you know, take it down from like active fraud or anything to just purely making bad decisions, like deciding to, you know, build a greenhouse too large or spend too much money on something or go in the wrong direction, you know, then the macro theme can be right, but your investment can not do well, because but that's just investing 101 for any industry is like that, you know. So that's what we're trying to do, is sort of take that mindset and apply it to this industry, because there is a macro theme, and then you want to invest behind the macro theme. Well, we think the industry will benefit from that, because, you know, stepping back, the capital markets should allocate capital to the companies that deserve it. You know, if you've proven that you can manage, you know, you manage this 500 million well, you should get another 500 million. And this guy who like burned 500 million should not get more money, because they've proven they can't do it, and these people proven they can manage it well. So that's
Right.
what we're hoping from a theoretical macro standpoint.
And would you say that kind of example that you just laid out is playing out when it relates to like the Canadian LPs versus the US MSOs?
Well, this thing with the cannabis in general is, because of the federal illegality, we have where they trade and who can invest in them is determined by those laws. Basically, the US operators cannot list on the NASDAQ or the NYSE because they're breaking federal law. So if you're an institutional, and a lot of institutional investors cannot invest, or they either legally or per their charters, they just don't invest in OTC and Canadian exchanges. They just only, you know, if it's not on the NYSE, I don't even care. You know, you're looking at, because remember, you know, buy-siders are usually looking at all industries and all companies, right? They'll have 2,000 companies in their universe, and it's like, oh, well, it's OTC. I don't care. I don't care what the theme is. I don't care what it is. I can't invest in it. It's a waste of my time. Move on. But the Canadian ones, since they aren't breaking any laws, they can trade there, so they can get institutional investments. So that's why they trade at such a premium, despite Canada, from a fundamental perspective, having a smaller market with lower margins and price compression versus the US market, which is larger and more profitable and growing better. But it's that's like a market, that's an artificial market dynamic issue causing that split, if that makes any sense.
It does, yeah. And I want to get into the specifics of the current state of public cannabis and specific companies to talk about. Before we jump ahead there, let's talk about the value of talent in cannabis versus other industries right now. Mike, you mentioned that you were part of the start of the tech boom, right? And I would imagine during that time that there were a lot of different professionals that came into the technology industry from different industries, right? I mean, is that the same that you're seeing in cannabis? And if so, how are they different? What is the talent pool, and how is it different in cannabis as compared to other industries? And Colin, please jump in also.
Yeah, Colin might know a little bit better on the cannabis side. I mean, I think just going back, like I said, basically I started working on Wall Street in '99, so it was like right in the peak of everything, and it was more, there'd be people in office like, oh hey, that analyst, 6 months ago he was writing reports, and now he's the CFO of this hot tech company that just went public, and now he's worth $10 million. And people were like, oh my, it was weird things like that going on. And at least what I saw was, people going from Wall Street to their clients, because if you could make a lot of money on Wall Street, you could make a ton when all of a sudden, you got some options and the stock went up 100% in its IPO. And then that quickly got crushed in 2000, in 2000, I guess the market peaks March 12th, 2000 was when the NASDAQ peaked, I think, and then it just basically went down, and then you had 9/11. So, then people wondered about that, but like I remember I was actually at a bar in Silicon Valley in about 2002, because my cousin lived out there, and it was sort of like, it seemed a little depressed at times, but those people, the people who stuck with it, they obviously have done pretty well for themselves over the past 20 years, right? It's been the fastest growing thing. And that's right. That I think highlights the importance of a macro trend, despite sort of intervening bounces in publicly traded equities. The macro trend was still there, right?
Right.
That's.com wasn't, but Amazon was.
Right.
But that probably was like cannabis.
I mean, it's a good segue, right? Because you saw a lot of the folks that came out of, I think there are probably better analogies. Tech is like the go-to, but let's stick with that. So in tech, you saw a lot of these big M&A transactions for companies that had certain metrics that were considered to be valuable at that point in time, right? But over the long term, that wasn't necessarily the case, right? Clicks or users, stuff like that. If you couldn't monetize in the business model, it wasn't nearly as valuable as, do they just tack on a bunch of goodwill after that transaction? And what's interesting is like, you see this more often than not in cannabis, where folks will say, we're going to go out and acquire them because of, and the metrics are much more reasonable and will tie to long-term value. But what you don't see that often is we're acquiring this team because they're really good at their jobs. We don't really care that much about the locations that they're working out of or the farm that they've built, because regardless of how much money they've put into it, like ideally they put less into it and they're cranking out yields out of this facility. And in Colorado, we see this because we've had the industry around just a little bit longer. Mm-hmm. You can have the nicest facility. We do have really nice, well-capitalized facilities, and let's just use cultivation as an example. And they're well-capitalized teams, and these are the best and the brightest from the food and pharma industry, and they can't compete with somebody that has wooden benches and a bunch of old HPS lights that's working out of a warehouse, because talent makes all the difference. And I think a lot of folks assume that if you have analogous experience in another industry, that you can just bring it to cannabis and turn it on and everything will be fine. But that's not the case at all. Even in retail, everyone says like, it's just Starbucks or it's just grocery, and I'd rather have a grocery person than a Starbucks person running the business. But at the end of the day, like, you don't have the infrastructure that those folks have. You don't, like, there's no Nielsen, and there's BDSA and headset and whatnot, but you don't have nearly as much information. And so what it has to boil down to is the middle manager talent and just operations talent in general is so important. So like when your company, when your favorite company or your holdings, like the stock that you have ownership in, goes out and acquires someone, like, go look at the LinkedIn profiles of the key people on that team, like see where they've come from, and even see like how many people have stuck around for a long period of time. Because that's the other thing, talent is really important, and much more important in cannabis than other less nascent industries. But culture is unlike anything. I mean, I don't have the most extensive career at this point and in a million industries, but culture in cannabis seems like it is much more important than any other industry. And if you cannot maintain a culture that will retain people, you're going to have massive turnover. You're going to spend tons of time recruiting new talent and trying to figure out how to train them. And then you're just taking your eye off the ball from your core business goals, which is ultimately being efficient at wherever you operate in the supply chain.
Mm-hmm. Colin, you bring up a lot of great points, and it makes me think like in a different perspective, right? Because, before, as an entrepreneur myself, I would always say human capital is the most important thing, right? It's so important, but it's so much more so important in cannabis because of all the different issues you've laid out. I mean, the expertise from the underground market, right? And the knowledge that the cultivators bring, the extractors bring, the testing labs and the navigating of regulations around that, right? I mean, there's so much red tape and lots of barriers to entry, if you will, that you need to be prepared of as an operator. But to have the right people in place makes all the difference. You can have all the best equipment in the world, but if you don't have the right people to operate it, you're going to be always chasing your tail, right? And that makes so much sense, even from like my perspective on the digital marketing side, right? Like, you have to understand the industry before you can even pitch or develop a marketing campaign strategy or plan. You have to know how to navigate with the censorship, issues that you deal with within the social platforms, what you can and can't say from a claims perspective on the health side. I mean, there's a lot of variables that go into this industry.
It's a really good example in digital, because not only do you have this like plethora, and you can speak way better to it than we can, right? But not only do you have this plethora of compliance, but then how do you speak to the demographics? And the demographics are so wide, right? The heavy users are their own, and they might make up 70% of your consumption, but you also want to be recruiting more long-term value clients that don't necessarily want the same message, right? So you can't just have some agency that's, they've been good at what they've done for 20 years, and so they're going to be good in cannabis. It's not how this works, right?
Right. No, not at all. And then when you talk about the analytics side of the house, like, the lack of like a Nielsen, right? You mentioned headset, which is great. They're doing great work. But I mean, the industry is so new still that the data insights really aren't there yet. So from y'all's perspective, like in addition to utilizing tools like what Headset provides and other companies, I mean, is a lot of this research just manual? I mean, are you guys pulling this stuff yourself and doing the research online?
Yeah. I mean, COVID was, for the cannabis industry, it accelerated the industry in a lot of ways. One of the best ways I would argue that it accelerated is putting all product information at the fingertips of everyone. It's no longer just sitting on a point of sale solution. And so when we run checks weekly on Florida pricing, and we have like a couple other checks, we do like state data where it's just disparate data, but we use Florida pricing, for example. We go in and we'll manually record the prices and the discounting that the operators are providing on every single category that they have in their store. And it's like, you can forecast you can forecast how management will talk about Florida on the earnings call months before it happens, just by doing something like that, right?
Right.
I mean, even one step further, Reddit is an incredible resource for cannabis analysts. You want to find out like what the sentiment is around a specific operator, go to Florida Trees if you can get in on Reddit, right? It's a plethora of information, but a lot of this it's super manual, and that's kind of where the opportunity lies for research, is being able to organize all of these data sources and provide them with insights to investors.
Yeah, it's not just, it's also beyond just being manual. It's also just, I guess, trying to talk with lots of people in the industry and just sort of know what's going on. Which, I mean, that's sort of a generally good thing to do in sort of any, if you're doing any kind of like long-term investing where you're trying to understand like what is actually the, management says X, is this actually what is going on in the industry or is it not? You talk to people in the industry, and try to understand what the real story is. And when those two align, then that's great. And when they diverge, that's usually, where there's an opportunity.
Mm-hmm. And how open are these executives from these MSOs and other companies? How open are they to talk with you? Is there a lot of transparency there or not so much?
I didn't necessarily say executives from the MSOs, just said just people in the industry, right?
All right. I mean,
Like, sort of like general, it's not just, it's lots of people in the industry, like I mean, you can talk with some people at the companies if they're, publicly traded. There's what they can say and, what they can't say. And,
I would imagine there's a level within the organization, though, right? A seniority level of people, of stakeholders that you're reaching out to. I would imagine it's not lower level or mid management. I mean, I guess to get a sentiment around, their thoughts around operations and whatnot. But when it comes to actual financial analysis, I would imagine you're talking to people at the top, right?
Well, yeah. So it depends on the questions you're asking. If you're just trying to get the understanding of their, yes, you have to talk with them to understand what they are saying their strategy is. And you have to understand that. And then if you're going to, ideally in investing, if you want to really have a different view, you have what's called a variant view. If you want to really generate alpha, it's to try to find out where, everyone thinks this, but I actually think this. And these are the, I've talked with these people that help me understand this concept, or, not looking for inside information, but more the mosaic of, well, I've talked with these 5 customers or these 5 suppliers, and they don't, they're seeing something different than what this company is doing. Or I talk with this competitor and they're seeing different competitive dynamics. They're discounting pricing, and, the company claimed, I'm making this up, the company will claim that they have a premium brand, and yet we keep seeing discounting, and the brand is so premium, why can't they sell at full price? Why they have to keep giving product away? So then if you can then understand it, then you understand, okay, so here's my catalyst on, everyone, the world is going to realize this is my variant view. And then here's the catalyst, the things that happen that everyone's going to realize that my view is actually correct.
I see that.
That's how the world comes to it.
That makes sense. For a lack of a better term, it's like you're cross-examining or cross-referencing what's happening based off what that particular company is saying that they're doing, and then you're kind of validating it by talking to those third parties that they're working with to see if, in fact, those operations are really taking place.
Exactly. Yeah, just sort of really understand what's really going on in the industry. That's just like an investing thing. One of the hedge funds I worked at was Hawkshaw Capital. And that's run by Kian Ghazi, and he does a lot of that. Like, that's sort of the whole thing. Hawkshaw is another word for detective. It's like gumshoe, except people still use the word gumshoe and they don't use the word Hawkshaw from 100 years ago. And that was the whole concept of like, we actually understand what's really going on in an industry, because we've talked with people actually in the industry, not just, well, the CEO said this and that's all the research I did. It's actually understanding trying to understand what's really going on, because sometimes they align, and that's great. It's like, yeah, the CEO's got this plan, and then I've talked with lots of people, and it all seems to be working, and I didn't find any problems with it. Right.
Right. So as you're talking directly to all parties involved, Is there anything that you're seeing like that's being overlooked from a strategic standpoint in cannabis that is worth noting?
You had a quick thoughts, Colin, or?
I think it probably comes like being overlooked. Being overlooked tends to be the primary things that we'll hear is, and we've touched on this in a couple of pieces like earlier in the year, but when you look at the most common thing that's overlooked is why are the financials the way they are? And what I mean is you've got this company that's generating, 40% EBITDA margins or 30%, something like whatever they are. But why? Why is it if they're at 30% and their peers are at 40%, are they not as efficient, or are they investing over the long term to make sure that they can be a better competitor in the years going forward? And this is kind of comes back to like, when you're looking at the financials of a cannabis business right now, it's not nearly as important as understanding what they're doing what they're doing around capital allocation, because the margins are important in understanding, if they can service their debts and how much leverage they can take on, or if they can go and raise capital, how they're seen when they're ranked against the peers. But at the end of the day, if they're going and generating a certain margin or certain revenues, and they're doing it by cutting a bunch of corners just so like they can get that short-term blip in the stock price appreciation, they're going to crash right after that, or at some point eventually, right? It's just inevitable. And so what we hear a lot is, things might look great from the outside, but on the inside, it's a complete circus. And like, we don't have the software to do X, Y, and Z. And our ERP doesn't link up to our live menu, like stuff like that, where it's little things and consumers may not necessarily notice, but it's just because someone's like wants to save, they're being penny wise, dollar foolish, right? And I think that's probably one of the things we tend to hear most often. The other one would generally be folks that talk about culture a lot, and when you pry open what's the hood of the car, it doesn't exist. But I don't think that's nearly as important as what's being invested inside of the company for like long-term success.
And that's why, so that point that you just raised is why I brought up the comparison between the Canadian LPs and the US MSOs, because from what I've read and what I've kind of just seen out there is that the Canadian LPs were doing a lot of acquiring, a lot of M&A acquisitions, right? And they were buying up a lot of different operators, but they weren't really producing, right? I mean, is that fair to say in the point you just raised, or not quite?
No, that's absolutely fair to say. And there's a ton of examples of this, but I remember there's a specific Canadian company, and they went out and made a big acquisition. And I think I was at their facility maybe a year after the acquisition had been made. And I remember walking through this gigantic cultivation and seeing it was a complete mess. There was like water all over the floor. Things were clearly like hadn't been done. There was pathogens on the plants. But then second to that, like you also had the manager who is supposed to be leading the integration, and it's a small thing, but he didn't know anybody at the facility, right? Because they were so busy that they were just tossing money around and trying to like show numbers at scale to the investors, but they had never actually integrated any of these operations, and they didn't really know what was going on at all the companies that they had brought in. And so when you look at that, like relative to the US space, I mean, now obviously the industry has matured a bit from 2017, 2018, but these CEOs know each other. They know each other's operations in much more detail. They generally, I would expect, know what they're getting with acquisitions. And so like investments are much more thoughtful, and they generally have been in the US, just because I think, I can't remember who said this on a podcast recently, but if the money's hard to find, you're generally going to have a more efficient business because they have to scrap for their profits and margins, right?
Right.
Which is an important aspect of the U.S. market that the Canadians didn't really have to deal with.
That's a really, really great point. Yeah. Mike, go ahead.
Well, just on a broad level, the issue with the Canadian market was they were raising money based on cultivation capacity. So if you wanted to raise twice as much and your banker wanted to make twice as much of a fee, they would tell you to raise twice as much money, and then you'd build twice as big a greenhouse. And then ultimately, I mean, we did this at MJBiz a couple of years ago. Like, you added up what everyone said their capacity was going to be. It's like musical chairs where you can't all win. Like, the total capacity, if everyone actually did what they said they would do, was like 2.5 or 3 times all Canadian demand. And you still have the illicit market. It's like too much supply comes online. And then if there's excess of supply, what happens to pricing? It has to go down. Right? Yep. And that's basically what Canada has seen. Like, too much capacity was built because in like 15, 16, 17, they raised too much money and built 2 big facilities. And this is before we even get to Colin's point that they couldn't even run a lot of those facilities well anyway at scale, because like an appreciation I have working with Colins is, I guess cannabis is easy to grow and very hard to grow well. Like, it's easy to grow ditchweed, but it's really hard to like grow, mediocre to good product. And Canada raised too much money and had too much supply, so the price is coming down. And now you're starting to see that supply get cleaned up and the quality is starting to improve as they're starting to get their head around that. But conversely, in the US, capital's very hard to come by, again, because banks won't lend.
Right.
Institutions aren't going to, they can't buy the stocks on the NASDAQ. So, like, it goes back to the whole capital constraint of high risk tolerant investors, the only ones putting money in. So if you have to fight for every dollar you get, you're going to be much more mindful of that dollar than, well, I know we only need 100 million, but this banker says I can raise 200 million. So, okay, double everything. Like, that's kind of what happened in Canada a few years ago, right?
Right. No, I appreciate you clarifying that. And that's actually a good segue, because I did want to talk to y'all about the current state of the US cannabis market, and specifically talking about some of the top performing MSOs that everyone has their eye on that's close to this space. So let's talk about the valuations, the volume, the catalysts, for companies like Curaleaf, Trulieve, Cresco, Green Thumb Industries, Air Strategies. I know I threw a lot out there, but I mean, take your pick. Let's start with one, and maybe we'll jump to the others.
Well, I guess
start with macro.
Yeah, just on a macro level, then I can tell you the U.S. industry right now is trading at 4 times 2021 sales and about 2.5 times 2022. It's about 20.5 times 2021 EBITDA, but only 8 times 2022 EBITDA. So assuming, back when I was, one of the last things I did at MJBiz was a trough analysis of where valuations bottom in financial crises, like the internet bust and then the great financial crisis in 08. Where did, consumer, agriculture, industrial, pharma, sort of all these companies bottom, and then only small cap. So I stripped out, wasn't including Microsoft in this analysis because, this was only companies below 20 billion at their peak, and they bottomed in those crises at 2.5 times sales and 7.5 times EBITDA. So based on that history, if you look on 2022, i.e. next year's estimates, so assuming those estimates are right, you're nearing those historical trough levels that other companies that are similar business models had troughed at in the past. So I mean, that, you can take that for what it is. Doesn't necessarily mean that stocks are going to turn around immediately, because the US operators have been basically declining ever since February. So they're down about, call it 50% off their highs. And Colin and I were just looking at this today. If you look at the performance versus November 2nd, like basically right before the election, which is sort of what got all these stocks moving, a couple of them like Cresco and Columbia Care and TerraSend, they're basically flat. So like if you took a long nap starting, like you went to sleep at the election and then like woke up right now, it'd be like, hey, nothing's changed. You would have no idea that went like this and you've come all the way back to now. So that's sort of, I guess, the quick macro. I don't know, Colin, you wanted to go any specific names or had any thoughts on specific names or anything like
sure.
that?
I think we touched, I mean, I don't have any numbers up, so that's full disclosure, but we'll just go off the cuff a bit. I think, and Mike wrote a great article on it. There's another one today in MJBiz, like general earnings was, for Q2 was strong for most companies across the board. We had really nice sequential growth, margins maintained for the most part. Some might poke holes in Trulieve, but at the end of the day, like they're outpacing everybody else's margins by a long shot anyways. So I think, in the top performers, I think one of them in particular, probably Curaleaf, who I'll admit, like I've been skeptical about for a long time, because I think when you come back to like the culture and the talent conversation, it's hard to build a culture with a company that rolls up so many companies so quickly. And I've seen it from the inside and have been kind of like, when does that pan out? Like, when do you ultimately have like the folks that are wearing like Curaleaf t-shirts to work, right? Like they really care. And if you see, like, if you follow, I don't know, Ben Culver is like an easy one to use as an example, but he seems like a little bit of like a culture king for GTI, right? And he really like maintains that presence. And so point being, coming back to this, Curaleaf, I've been skeptical about. And I think that a lot of these theses prior to this quarter was, if you went and looked at all of the acquisitions, like, was the business still growing organically? And now, granted, we didn't get a super clear look this quarter because, I mean, you can strip out EMAC and there's one other investment, I can't remember off the top of my head, but they grew. They had a massive organic sequential growth rate from all of those businesses. And I think that kind of struck that bear thesis prior of that. A lot of folks thought that the business was actually shrinking, but they were rolling in new assets. Is clearly not the case. And so I thought that was super impressive. Margins were maintained. I'll say one thing that we've been watching internally, they're putting on a pricing war in Florida and they're leading the pricing war. I think a lot of folks have thought that AYR might have been involved in leading it, but I think we wrote an article for MJBiz months ago on how Curaleaf started this back in May. They have not slowed down, but what's interesting is that it seems like that pricing war might be spreading into their other markets. And Boris's strategy is the chairman of Curaleaf wants to own the biggest market share, and now he's got Trulieve just knocking on his door with the acquisition of Harvest. There could be some type of strategy there where he's going out and discounting everything because they're so well capitalized in an effort to just collect as many users as possible. And he's doing that with Select, with the, I can never remember what the drink products are called, but then the vape as well. And you saw that like over the weekend for Memorial Day was Arizona, Massachusetts, Illinois, like places where discounting has not been a big part of the narrative, because prices are so high and people want to maintain that collectively. It seems like that might be starting to change because they're turning the screws on their competitors. So that's Curaleaf.
So that makes a lot of sense. And when you talk about like, the acquisition that Trulieve made with Harvest Health, I know another one was TerraSend buying Gage, leading dispensary out of Michigan, right? So are we going to start to see more consolidation at this point?
I think we've always, like with Harvest and Trulieve, I guess we always just viewed it as consolidation being inevitable just for the industry. It's a fragmented industry, and that's obviously a big deal, and it's a big deal for the companies involved. Our take for the industry is that now, the Harvest assets will be owned by Trulieve, and the industry generally is going to consolidate, and that's going to be at least good for like Harvest cost of capital, and being able to refinance some debt for them. But like just the industry overall will, you'll probably have more, you'll have fewer larger operators over time, just as it inevitably consolidates. And also as these operators keep buying, even as like sort of the public ones buy, smaller private ones as well. Like you've seen Curaleaf was buying Los Sueños in Colorado, and
Yep.
You'll just generally see that, especially as they have a capital advantage with, just having publicly traded currency. The public companies trade at higher multiples than we've seen a lot of the private. When they buy something privately, it's going for a lower multiple, and that's just as much that they don't have their equities not trading publicly. So.
And Curaleaf even went outside the US recently also. Didn't they make an acquisition out in Europe on the medical side?
Yeah, that was the EMAC acquisition that they made. I think that, this comes back to what we had previously seen was private operators trading at a discount to public operators for a long time for various reasons, but mostly because, the reasons are like financials are more difficult to go back and audit, but then on top of that, like there isn't the scale that you have with public companies. But I think that trend has started to converge a bit, at least from what we've seen. And in Europe, it's really one of those places where you can still, because the market is not developed at all, you can go and get a discount on an asset that could be worth a lot. And it's more of, it's like an investment on the future inevitable demand of Europe, but like, will that company win is to be seen.
Mm-hmm. Got you. And what other US MSOs should we discuss or cover, as it relates to current valuations, volume, catalysts, etc.?
Trulieve is definitely an easy one to dive into because it's been talked about so often. TerrAscend's another easy one because we cover Michigan quite closely, and so we've been digging into Gage for a while. But on the Trulieve side, there's two sides to this, right? A lot of people will say that they haven't been participating in the pricing war because they're not discounting the way that you've seen from Curaleaf. Or let me just for a moment, GTI is an active participant in this entire process because they don't have skin in the game. So they go and discount every week, and no one's going to talk about it on their quarterly earnings, right? But they're doing it so that their peers have to follow their steps, which is a super fun strategy to watch. But on the Trulieve side, they've been cutting pricing and not doing discounts. And so that's been an interesting takeaway that we've been watching. And Kim Rivers spoke about it on the conference call last on the Q2. But then, I said that earnings, other than the margin compression, seems like it should be baked into any investor's thesis with Trulieve. They have so much market share that's inevitable that will deteriorate over some period of time. And with them working on Harvest, they clearly, there's only a certain amount of bandwidth that any company has in a given day, week, month, quarter. And they can't allocate it all towards Florida if they're working on Harvest at the same time. And of course, again, Curaleaf is going to turn the screws when Trulieve takes their eye off the ball in Florida. And so I thought that the quarter otherwise was compelling. And then the integration of Harvest, which they're now doing some tricks with Harvest on their discounting side so that they don't have to do it themselves, that we started seeing, but we'll see if they actually comment on that in the coming conference call.
I guess the good thing on Harvest though for Trulieve is that it also, from a Trulieve shareholder standpoint, it'll diversify their markets into more additional markets and also give them, something that they can integrate. That Harvest plus Trulieve should have, the Harvest assets within Trulieve should probably have higher margins over time than they would just stand alone. So also, so if you look from the Trulieve shareholder perspective, if in 3 years we're sitting there thinking, you just stayed in Florida and you just, had your core market sort of subject to additional competition, why didn't you, and now the company's smaller, why didn't you do something? Well, this is what they're doing.
Right.
It's hard for them to go into other markets. Like, yeah, Florida got smaller, but don't worry, we got Arizona, we got Pennsylvania. Like, you want the management team to realize that we got something great going in Florida. Let's expand to other markets and have those things to offset and just diversify the business overall, to try to offset that pressure that, like it was said, would inevitably come. And just that most consumer businesses don't have a single operator with 50% market share. Like, that's just, competitive businesses typically don't have that, right? This isn't software. This isn't like Microsoft, where you just have one company dominating it, right?
Right. No, totally. And, that also makes me think about when you talked about earlier about like the macro trends that we're seeing and, following what's happening, both within the financial markets and then just the economy overall and, the different variables that were being thrown. You mentioned during the tech boom, the, 9/11 and 2008, the financial crisis. Well, we're facing a pandemic, right? And as you said, Colin, that pandemic has really accelerated the cannabis industry in a lot of ways. But I want to get your guys' thoughts on the first draft of the federal cannabis legalization bill that was proposed by Chuck Schumer and the other senators. One thing that stands out to me is the proposed increase of the federal corporate tax rate up to 26%. And before we recorded, we talked about that rate, in addition to the hamstring of 280E, and then even with the local, taxation, right? You got a lot of things that you're dealing with right out the gate as an operator. So what are your thoughts on the first draft of the bill, specifically about the proposed federal corporate tax rate and other components of that bill?
Well, so the corporate tax rate, and so there's two separate things. The proposed raise in the overall corporate tax rate to 26.5 versus 21% right now. It's important to know that that'll hit cannabis especially hard because of the 280E provision, which, to grossly oversimplify, cannabis companies pay federal taxes not on pre-tax income, but on gross profit, because they basically can't deduct most things that other companies can deduct. So raising it from, basically they're going to watch their federal taxes go from 21% of gross profit to 26% of gross profit, which, if you're paying a 50% gross margin, that's going to raise it from about 12% of revenue to 15% of revenue. So it's just they're already heavily taxed. And then the other issue is, because it's on gross profit, you can basically be profitable before taxes and then unprofitable after taxes. Normal businesses, you don't get taxed to unprofitability. Like, and that's actually in like the Constitution, that you can't overtax, you can't tax more than you make. But with cannabis, you can. Because you can have, if you're making $100,000 and you have 50,000 of gross profit, but only 10,000 of, pre-tax income, your state income would only be on that 10,000, but the federal government's gonna say, give me 21% of the gross profit. Okay, that's, that'll be $10,000. All of a sudden you're negative, right, when you include all the taxes. So that's just one thing that probably, I think, is maybe weighing on a little bit, absent any kind of relief from 280E, which would come from legalization efforts. And you mentioned the Schumer bill. So the one thing that just struck me in the Schumer bill was the proposed excise tax seemed like it'd be awfully high, even higher than what most companies are paying through 280E right now. I think it seemed so high that it would basically support the illicit market, because that's one thing I think the government needs to realize, is that these companies are really competing with an untaxed, unregulated version of the product. And if you overtax them, you're just basically increasing prices and making consumers pay higher prices, and then supporting the illicit market, which has no taxation, no regulation, questionable product quality, right? Because there's no regulations on it. So I think it's in their interest to, and some people have said that the excise tax proposal is sort of an ask, and it'll inevitably get like, you ask for the moon and then make it feel like a favor when you come down to, okay, fine, I'll come down to 10%, right? So maybe that's the politics behind it. But that's one thing that struck me, was like, if this actually goes through as written, you're just gonna have a thriving illicit market.
Yeah. That's exactly what Steve D'Angelo and Andrew D'Angelo said when they were on the podcast recently, is that like basically if you go through with the 26%, 0.5% imposed tax, in addition to everything else that you mentioned, 280E, local taxation, there will be no legal cannabis market, right? I mean, it's just only going to fuel the illicit market more because, as you mentioned, they're not dealing with the regulations, the taxation, all that stuff, right? I mean, they're just doing it under the table. Um, do you know if there's any movement happening as it relates to eliminating 280E? Because I asked because we hear a lot about safe banking and how that seems like it'd be like a logical first step in reform. But have you heard anything about the federal government moving on removing 280E?
Well, it'll get removed if either it gets descheduled, because that's basically like it's 280 applies if you're trafficking in illegal, Schedule 1 or 2 illegal substance. So if they deschedule it, then that would do it naturally. I think there were some versions of the Safe Banking Act that would carve out cannabis to have that not apply anymore. The Schumer bill obviously would remove 280E, but then replace it with an excise tax, which conceptually we think actually makes sense. Like the Treasury likes getting the excessive 280E taxes, and a transparent excise tax just on revenue would eliminate that issue of, well, I'm not profitable after, taxing on gross profit from a financial standpoint makes no sense whatsoever, will lead to, malinvestment and, bad decisions that don't make financial sense because you're calculating things in a screwy way. Whereas like a transparent excise tax, like, yes, you pay normal taxes, but then you pay this thing on top. That makes a lot more sense from a business standpoint. And then it's just a function of them setting what that level would be. In terms of, I don't know, hearing stuff within Capitol Hill, though, I mean, I don't, Colin, if you have any insights. It seems like it's
we read
slower
the same
than we
marijuana policy
expected.
project.
Yeah, we're not hill rats. We're not knowing what's going on, at the Capitol Hill. We can interpret what if X happens, this is what it would mean. But like in terms of like how stuff is moving, it seems like the stocks are down because I think a lot expected at least safe banking to pass, which would be a big help to the US operators. I mean, all US operators, private and public, in terms of just reducing their cost of capital, because that's currently the key advantage that the Canadian operators have, because they have normal banking and normal financial markets behind them. And the commentary about, like the Schumer bill, especially Booker's comments about, sort of blocking anything else to go for the larger, more comprehensive bill that, SAFE has already passed and it's easier to pass. Something that's more comprehensive will take longer. It's not happening. It'll take longer to happen. So.
Right. And seems like almost, I mean, impossible really, just due to the amount of complexity and just peeling back the onion that they're going to have to do to get a comprehensive bill across the finish line. It seems like it makes more sense to kind of start with small incremental wins to kind of get to that point. And safe banking just seems like a big one that could help in so many different aspects, not to mention just on the financial side by, opening up the larger institutions like we talked about earlier, but also the crime, right? Eliminating crime and not enforcing these companies to operate in using cash only. It's kind of crazy.
Yeah. I mean, I think trying to apply logic to politics is probably a losing battle, right?
Yeah.
But the point stands. And I think that like you've seen some of the folks on the opposition talk about how cannabis has access to banking and all of this like kind of like nonsense that they just bend reality and pitch to their audience. But you're right. Like, and we talk about the crime, like it's not anomalies, right? Like Mike and I went on a tour recently, and in Colorado, a cultivation had folks just drive into the side of their warehouse to go and steal cash and plants. Like,
like literally ran the wall, like just.
And like, this is, if you follow like Blacklist on Instagram, like this happens in California pretty often. And it's just because you have to have all this cash like sitting around. Retail is much, much worse. And it's tough because explaining that to folks outside of the industry, and they say, well, you can use banks, and like, maybe there's 3 banks or 2 banks per state that you might have access to because they're bending the rules internally. But you still have to deliver cash to the IRS, right? It's so much more complicated. It's tough to try and illustrate how painful it is to folks. But I know even in my time kind of working with Urban Grow, like delivering cash was not like an abnormal occurrence. And there's nothing more unnerving than having $50,000 of cash in your car.
I was gonna say, how unsettling is that? Like having to be the transport gal or guy or gal, like with all this cash. I mean, were you strapped? Did you have a gun or anything with you? I mean,
I live in Boulder. That's sacrilege up here.
Of course, a Texas guy's gonna ask that,
Yeah, of course.
That's too funny. Well, hopefully we can, the government can do something to address the safe banking issue, because I know that has just been a thorn in all operators' side, up to this point. As we wrap up, Colin, Mike, when we talked earlier, one thing I thought was really beneficial, especially to those listening, is, just certain best practices or techniques or tactics that the regular investor can just implement to be better as they look and research the cannabis financial market. So what would be some just kind of easy steps that one could take? Obviously going to y'all's website, MJResearchCo, and learning from there. But I mean, is there stuff that the average person can do to just become a better, more savvy investor?
You have to read the first step to becoming a better investor. Read the filings yourself. If you're going to have, unless you're getting your information from someone that has the credentials and experience to filter the information for you, it's really important to dig in and understand the details of what you're investing in. Because especially I love the community on Twitter is awesome, and there's so much information that's available to a lot of people, but it'd be very easy to go in and create an investment thesis just by looking through like conversations that you've seen on social media or comments from even executives through that channel or on conference calls or in press releases. I think that, a fast way to get better as an investor yourself is to crack open the MD&A or the interim financials, or hopefully one day 10 Qs and Ks, and build the model yourself and evaluate how you feel about that company versus the peers.
Yeah, try to basically think for yourself and just try to understand, what the company does and how it makes money and sort of where return will come from. In terms of like, this company, they're going to take this capital, they're going to open up this cultivation, and then in 2 years it's going to generate this much revenue and this much profit? Or is it, will that ultimately ever generate cash into the business to ultimately support your investment, right? Because there's basically 2 ways to get paid by the company. Like when you make an investment, there's sort of 2 ways to get paid back in it, right? Either the company sends you dividends or buys back your own stock. Like if you theoretically shut down public markets tomorrow, right? And for 5 years, they just never traded and you couldn't sell it. Some companies will send you a check, every 6 months, right? Mm-hmm. And others won't. And if you don't have that check coming in, then it's entirely on, either it's not profitable today or it's not paying dividends today or buying back stocks today, but I can see where it will be, or I can at least see the business is getting larger, or it's, I'm just hoping that someone buys it back from me at a higher price. And then you have to understand, well, why will they buy it at a higher price? Is it that the revenue is going to go from, 500 million to $1 billion, and the profit's going to go from 0 to 300 million? So that'll be worth something to them. Or am I just hoping that they get more excited than me, right? The greater fool theory. And like that latter is, a lot of people do it, and it can work short term of, I paid for something too much. I overpaid for something, but this person paid even more. So great, I win. That's not really sustainable, because ultimately you run out of that person, right?
Right.
You run out of the greatest fool, and you're the greatest fool then. So we try to look at, it's not that you have to generate cash today or tomorrow, but take capital, allocate it well, and grow the business, and then repeat that. Because I mean, honestly, to the extent that the industry is so nascent, all these companies should be reinvesting to grow their business. If you believe the macro of, there's, still a 50 billion, 60 billion, who knows how exactly how big it is, illicit market. And, this could be $100 billion industry if everything goes fully legal. Well, they're like, the current infrastructure could not support that kind of a market right now. Like, they have to, and you want them if it's a high return, right?
Mm-hmm.
But like Colin said, just think for yourself, do your own work, and try to, the other things, the best investment thesis can be like described to a 7-year-old, right? Like, they make something for X and they sell it for Y, which is more than X, and they keep this much, and that's how they make money. And you can't do that, then if you don't understand it, then there's something amiss, or then you don't have to buy it just because someone else is.
Right. Right.
So
Keep it simple. Colin, did you have something to add?
maybe one last one because we've seen this a little bit more recently, and it's been a tough week in the cannabis markets.
That it has.
It's a tough couple weeks. I think sizing positions and trading your positions according to your core thesis, right? So there's a lot of ego that comes into when you invest in a stock, and when you're spending a bunch of time researching it, you have this ego of I understand the story, I understand the numbers, I understand the narrative, and so I'm going to do X, Y, and Z. But you have to take into account that sometimes the market moves in ways that are inexplicable, right? Or non-fundamental reasons.
Mm-hmm.
And so you should have a plan. And it's really well described in the Market Wizards books, if anybody's looking for a recommendation, but have a plan going in when you do initiate those positions. If I lose 5%, within the first week, I'm going to cut the position and reevaluate my thesis. If I'm down 20% after a certain period of time, if I'm up 40% in a certain period of time, have a general plan of how you're going to position yourself with the stock, because more often than not, if you're going to hold through, I think in a lot of institutional funds, and Mike can attest to this as well, but you're taught to, if you're down on a position 3% in a day, you are either making a ton of phone calls or you're just cutting the position immediately, right? Like, what do I not know that somebody else knows? And we've seen this in cannabis quite a bit recently. And if you're in that position where you're down 10% in a week, you can always reinitiate the position. I'm not saying to like sell or buy or whatnot, but take your ego out of it and just understand that there will be a trough and there will be a rebound. And you can certainly hold through all the volatility if that's your plan. But if it's not your plan to potentially go and have, incur losses along the way, then cut it and come back to it when you feel more comfortable. You don't have to, lose 40% over a few months because you're confident about your thesis and you know that it's going to rebound. You just don't know when.
That is really, really great advice, gentlemen. And Colin, mentioned that book again, because I definitely want to check that out. What is it, Mark?
It's called Hedge Fund, or it's called Market Wizards, and there's a series of them. The Hedge Fund Market Wizards is probably the best one, but the first one, Market Wizards, is also very good. They interview a bunch of very successful fund managers about, Jack Schwager, who lives in Boulder, interviews a lot of these kind of historically great fund managers on their processes. And it's really good insight into like how these folks think about theses, narratives, sizing, et cetera, even losses.
Awesome. Thank you for sharing that. Yeah, I'm definitely going to check that out. But gentlemen, I really appreciate both of your insights. I know that I learned a lot today. And I know the audience did as well. I do want to give y'all an opportunity to share where people can find MJ Research Co., your website, social media, anything to learn more about the company and the great insights that you're providing for the cannabis investing community.
Absolutely, guys. You can find us at MJResearchCo.com. And that's where you'll find all the analysis. You can sign up for a free membership and get a bunch of content. You can see some of the past analysis that we've done with deep dives on companies like the Parent Co. or Weed Maps, as well as get on our newsletter that we send out every few weeks. And then you can follow us on Twitter. I believe it's at MJ Research Co. And those are probably the best two channels. You can follow us on LinkedIn too, and we'll probably start updating them.
Perfect. I'll be sure to add the rest of the links in the YouTube description box so people can easily find it there. So
awesome.
Thank you guys so much. Really appreciate it. I'd love to have you back on in the near future as this industry continues to grow and evolve. And just, to hear all the interesting and important insights and stats that y'all are researching for the industry. So come back on soon, guys.
Thanks so much for having us,
Cool.
and for everything you're doing for the industry.
Absolutely. Yeah. Thanks again for crunching those numbers for me. I'm going to use that clip.
Perfect.
Hey, and thank you all for listening. Until next time. Bye.